Oracle, because as you just saw, it's been on a tear. In fact, this week as well, since reporting earnings and had a financial analyst day. And as Dom just told you, up over 55% this year. The second best technology performing stock behind only NVIDIA. Our next guest called the stock his top investment idea. Joining us is Bernstein's Mark Moerdler. He has an outperform rating on Oracle, raised his price target recently to 201. What a week it's been, Mark. Why do you feel there's more to go here? Obviously, I mean, I still remember the call. Larry Ellison sees data centers as far as the eye can see.
It's been very impressive. This has been a hidden story for a while, as Oracle has been shifting the whole business to the cloud, and they've been building out capacity. But what's interesting is they built stuff that's very different. Their IaaS PaaS capability is differentiated from the big guys, Microsoft, Amazon, and Google. And because of that, they're growing significantly faster than their peers in that market space. And so why do they keep doing well? They keep doing well because the company last night or yesterday raised their numbers meaningfully. They raised the guidance for 2027, and they put out 2029 guidance, showing that they're going to, in the last 2 of those years, they're going to grow 16% year-over-year revenue growth. And that in 2029, they're going to have margin improvement year-over-year, EPS growth year-over-year of 20% in the out year. So this is a business that is accelerating, and the street, frankly, doesn't fully believe that. They haven't. They believe that Oracle was one of the losers in the cloud for quite a period of time, and now people are just not sure. And so I think as we go through in a market in which the rest of software is not doing that well, in which macro is impacting many of the growth names, and the growth names are slowing for natural reasons in which the businesses have saturated, and for many reasons these traditional growth software companies are decelerating, and Oracle is accelerating. And that's going to shift to investor focus.
Right. All right. Well, you write, I think, in a recent note, there's a lot of innovation going on at Oracle. This is obviously after having attended numerous keynotes and presentations at the Oracle Cloud World Conference. So what would be a sign of the innovation that perhaps is still not fully appreciated by investors?
So Oracle has basically made the cloud available anywhere. If you are going to use the big three, Microsoft, Amazon, and Google, you have to put it in a data center, often the size of a football field. On the other hand, Oracle is building their Oracle Cloud data centers that, yes, they can be really big, but they could be in sovereign for individual countries. They could be for individual companies. They can, in fact, give you the full capability of cloud, IaaS, PaaS, and SaaS, running it shortly in 3 racks. They could run it on a cruise boat if they wanted to. And so the flexibility is significantly differentiated, and it's going to take a lot of work if the big guys decide they want to move into that part of the market.
Wanted to ask about Adobe, which I believe you cover and have an outperform rating, and is not doing too hot today on that guidance. Does that change anything for you?
No, I mean, the optics of the guidance is not very good. The argument that management has been making that the business would accelerate in the back half of the year, and they would imply that it would grow faster next year. They're guiding for a weak Q4, and the reality is there's a lot of one-time events that are driving that, and that's going to weigh on the stock until management is able to prove that those really are one-time events and that the business is truly accelerating. On the other hand, if you look at it in a market in which most of software is decelerating, Adobe at the current rate of growth, given their margins and everything else, is not a bad investment. But for the stock to really work, they've got to show acceleration. And so everyone's going to look at their Max conference and hope we're going to get some information there. Or it may take a couple quarters in which the stock is simply in the penalty box. But we're looking on a longer term, and we do think it will accelerate.
Mark, appreciate your time. Thank you.